Gold and silver tumble as the high rates Powell strikes again. Gold tested last week's 2023 lows on Wednesday, and silver prices fell to 4-month lows against a rising dollar as global stock markets also extended yesterday's steep drop after U.S. Central Bank Chief Jerome Powell said the Federal Reserve is set to raise and keep interest rates higher for longer to fight inflation. The ultimate level is likely to be higher than previously anticipated. We need to continue to tighten, the Federal Reserve Chairman told Congress in his semi-annual testimony on inflation and monetary policy, adding, "Betting on this month's Fed meeting flipped in response, with the odds of a half-point hike now put at 3-4, the same likelihood put on a quarter-point rise only at the start of this week." Gold is testing toward late February support levels after being hammered overnight, says a trading note from Swiss bullion refining and finance group MKS PAMP, adding that silver has dipped below $20 for the first time since November last year. Now down by almost 1/5 from early February's 9-month high, the silver price today edged back above $20 per ounce after losing 2/3 of its rebound from last summer's 2-year lows. Gold prices for London settlement meantime traded some 1.7% below yesterday morning's London benchmark price, the steepest drop since blowout US jobs data for January spurred a surge in hawkish betting in the interest rate markets. With the S&P 500 index of US shares now more than 17% below New Year 2022's all-time high, Fed interest rates are already above the latest pace of growth in the US economy, a restrictive stance not seen since 2007, eve of the global financial crisis. The full effects of our tightening so far are yet to be felt. Even so, we have more work to do, said Powell to lawmakers in Congress on Tuesday. "You are gambling with people's lives," challenged Democrat Senator Elizabeth Warren, telling Powell that, "You cling to the idea that there's only one solution: lay off millions of workers. Will work people be better off?" The Fed chair replied, "If we just walk away from our jobs and inflation remains 5 or 6%. Appointed in February 2018 by Republican President Donald Trump, Powell was over the next 18 months lambasted by the real estate tycoon for supposedly being a low-interest rate guy. Turned out that he's not, as the Fed continued the rate-hiking cycle begun by Powell's predecessor Janet Yellen, now Secretary of the Treasury under Trump's Democrat successor in the White House, Joe Biden. The Powell Fed then paused and started to cut rates in summer 2019 when the bond market signaled recession ahead with an inverted yield curve. Here in 2023, the most closely followed yield curve gap today set a new four-decade record inversion, with 2-year Treasury bonds now offering new buyers more than 5% per annum, the highest return since June 2007, yielding 1.08 percentage points above 10-year bonds. That snaps the typical pattern of longer-term loans costing borrowers more per year than short-term loans, and suggests that interest rates will have to fall in future. During the Fed's 2015 to 2019 hiking cycle, and with rates going from 0% to a peak of 2.5%, gold rose some 35% in dollar terms, while U.S. consumer price inflation rose by half a point to 1.7% per year. The current Fed hiking cycle starting in March last year has so far taken overnight rates from 0% to 4.75%, with the gold price slipping by 3% as CPI inflation has slowed from 8.5% to 6.3%. Fed hawkishness is perhaps slightly surprising given the continued slowdown in the United States housing market and a downward revision to GDP growth, says a note from bullion market analyst Rona O'Connell at brokerage StoneX. But with U.S. jobs data due Friday and today's private sector ADP payrolls estimate blowing past consensus forecasts for February's stubborn inflation data, will have underpinned the views of the hawks among Powell's FOMC colleagues. Overall, gold is likely constrained by rate concerns, supported by geopolitics, O'Connell says, pointing to worsening U.S.-China relations and the continued war in Ukraine.